richest 1% holds the half of the planet's wealth. So how do they do it? What do they do that makes them so rich? So the answer to that question is they hold on to assets. They create assets, they generate assets, and most importantly, they hold on to the assets. So in today's video, I'm going to tell you 7 asset class that you can invest in and generates enormous number of wealth, which can literally put us in top 1%. My name is Shantanu from Next Gen Money. If you are new in here, in Next Gen Money, we talk about savings, we talk about investment, we talk about financial planning. So if you're interested, you can go ahead and click the subscribe button, and you can go ahead and click the like button. It's a huge motivation for me. Before I start, let me tell you about a little bit about asset. What asset is? The answer to that is asset is something that puts money in your pocket. On the other hand, liabilities are those which pulls money out of your pocket. So your target should be always create more and more assets and reduce your liabilities. All right. I'm going to tell you 7 different class of assets in today's video. This number 7 is my personal favorite. So the first class of asset is real estate. All right. So guys, your house is not an asset. Surprising? Well, let me tell you why. Your house doesn't pay any money to you. It doesn't put any money to you. On the other hand, it takes money out of you. So you can consider your house as a liabilities. You need to pay your electricity bill, water bill, taxes, maintenance charges, all kind of stuff. So house is not an asset. But if you have an apartment that you are renting it out currently, that you can consider as an asset, wherein your rent comes in, flows into your pocket without doing much of a hard work. So there are many ways you can earn money from real estate. The first one is renting. Well, if you have a property, you can definitely go ahead and rent it out, and which flows in money every month in your pocket without doing much of a hard work. There is something called property flipping. Let me tell you what property flipping is. Property flipping is something where you invest in a property in much more cheaper price, the area which is underdeveloped, and then you hold on to the property for a certain period of time, maybe 5 to 10 years. And when the area develops, you just sell on the property and you earn that appreciation. That is your profit. So that's a very nice way actually to generate huge number of wealth. So let me give you an example. Back in 2008, if you look at Mumbai and the surrounding area of Mumbai, the price of apartment on that time, it was around 50 lakhs, 60 lakhs. You can easily get 2-bedroom kitchen apartment. And as we are approaching in 2020, if you look at in today's days, those properties in 12-year times has crossed doubles its price tag. So if you want to buy a 2 BHK apartment in today's date in Mumbai, it would be costing you from 1.2 to 1.5 CR. So that is a huge number, huge jump of capital appreciation. So this is one of the best way you can earn money by property flipping. The second class of asset that I would like to talk about is stocks. Stocks, equity, and shares, they all are the same thing. But before I start telling you more about stocks, you must have know somebody in your family, somebody in your neighborhood who lost everything in stock market, who lost their house, who lost their pants, shirt, underwear, what's not. But let me tell you something. It's not stock is a wealth generating machine, but if you only know how to use it. If you do a little bit of research, if you ask those people who lost everything, if you ask how do they lose money, most of the time they will tell you they get a tip from their friends, they get a tip from the TV, they get a tip in the social media, or somebody just told them. Guys, this is not the way you invest money in the stock market. All right. You do not buy stock, or you do not buy a company that you are not aware about. Don't run behind XYZ because somebody in the TV, those potato heads, told you to buy some stocks. Do not do that mistake. All right. Just know the company that you are investing in. Let's say Apple. You know what Apple does? They make iPhones, they make iPads, they make laptops, all kind of products, right? Or let's say Gillette. As Gillette, they make men's grooming range. They are existing in this in our planet for last 50-60 years, so they have a proven business model. So you can easily, comfortably invest money in these companies. Go to their website, pull out their financial data, see how much profit they have made in last year or so, and do a little bit of research and invest money in this company. I'm telling you guys, This is the best class of asset and very easy to invest. If you want to invest in real estate, you need a lot of money to invest in real estate, but stocks, you can own a company with a very cheap price tag. So consider investing in stocks. It can make you rich. Well, there are many ways you can earn money from the stock. The first one is dividend. Well, what happened, let's say if there is a company which has 100 shares in the market and you have purchased 10 shares of the company, that makes you the 10% owner of that particular company. So what happened when the company makes a profit? They give out the profit in the form of dividend, and they give you out 10% of their profit in the form of dividend. All right, this is a very easy way to generate an easy cash flow when you're holding on to the stocks. And there's another way you can earn money from the stock, is called the capital appreciation. So if you see there's a company which is undervalued, and if you see people are not noticing, but you see there is a huge growth potential hidden into that company, you can go out, bet your money in that company. After a few years, when the price skyrockets, sell those companies. This is how you can make money from the stock market. All right, always do your homework, always do your research before you invest in stock market. It's not complicated as they sound. Let me share with you one interesting fact. In February 1996, if you have invested in Infosys, 50,000 rupees. In today's days, in 2020, the valuation of those 50,000 would be 4.5 crores. 4.5 crores. Come on guys, that can make you one of those, that can put you literally those 1% richest people in this world. So that is the potential, and that is the power of stock. So don't get confused. Do invest, build confidence in yourself, invest in stock market. It's definitely gonna make you rich. Well, the next class of asset that I like to talk about is bonds and fixed asset. Well, I kind of combine them together and so that is easy to understand. Well, the common thing about bonds and fixed income is they are very safe. So what bond is? What is a bond? So when a company or a government needs out money for its own project, maybe they are building roads, maybe they're building airports. So what they do, they ask money from the investor. So you as an investor, you can invest in government bonds, and in exchange the government, they promise you to pay interest. Typically a bond's tenure starts from 1 year up to 30 years. So if you hold on to a bond for next 10 years, so every year the government gonna pay you out interest. At the end of the maturity, which is after 10 years, they're gonna give you a principal amount back. Bond is very safe. It's a little bit better than the bank fixed deposit, and it's also give you easy liquidity and easy cash flow. You can consider investing in bonds. They're virtually risk free, but keep in one thing in your mind, guys, that low risk and low return, they're always like working together. As I told you about stock market, you might expose to a little bit of high risk, but it has a very high capability to give you much more higher return than any other asset class. So bond is low risk, low return. You can expect a return between 7 to 9%. The next class of asset that I like to talk about is mutual fund. I know it is very famous among current Indian populations because it gives you a nice exposure to stock market without taking much of a risk. What mutual fund is? So if you see in stock, you invest individually, you pick up stock independently, but in mutual funds you buy a basket full of stock without taking that much of risk. So a mutual fund pulls money from different investors and they put the money in the stock market. So the upside of investing in mutual fund is professionally managed. Your money is safe. You have a higher chances of grow your wealth. The return that you can expect from mutual fund is much more higher than the bank interest or bonds or any fixed income. The downside is, well, higher risk, higher return. You might lose money, but if you think about longer term, 5-10 years, you're definitely gonna make some nice percentage of return on your investment. Different kinds of mutual fund which is available. One is called equity mutual fund, which is completely invest in stocks and equity. There is something called hybrid mutual fund. In hybrid mutual fund, they kind of invest in stock plus bonds, plus all kind of debt equipments, and also there are debt mutual funds. So if you do not want to take any risk, but you want a little bit of better return than the bank or fixed income, you can consider investing in debt mutual funds. So there are many ways you can earn money from mutual fund. The first one is dividend. There are some mutual fund which pays out dividend quarterly or yearly and yearly basis, which creates a nice cash flow into your account. And also the capital appreciation. So with time, when the stock market goes up, along with that your mutual funds value also goes up. So how to invest in mutual funds? Well, it's pretty simple. There are a lot of online platforms that are available in today's date. You can just register with your KYC details and you should be set to invest in mutual funds. Also, you can buy directly from the asset management company, or if you have a stockbroker, you can contact them for buying mutual funds. But keep in mind that mutual fund does expose you to a little bit of risk. Plus, come on, for a higher return, a little bit of risk is worth taking. Well, the next asset class is commodities. Well, gold, silver, gemstone are the basic commodities that people like to hold on to. In India, we definitely love to put money in gold, and we basically hold on to this gold in a physical form. But there are huge downside of holding golds in a physical form. First thing, when you buy gold from a jeweler, is not pure gold. There must be some kind of mix up in that gold. The second thing is you have to pay your making charges on that gold. Third thing, you have to store it in a secure place. Sometimes we hire a locker in the bank and where you pay out yearly rent for that locker. So the best way, what I think according to me, is buying a gold bond which is issued by the government of India and is regulated by Reserve Bank of India. It's a very nice way to invest in gold. So what happened when you buy a gold bond from government of India? They pay you out interest every year, and at the maturity they pays you back your principal amount, and that amount would be the real gold price on that time. So let's say if you're investing in gold in today's date at 30,000 per 10 gram, after 10 years gold price become 60,000 per 10 gram. So when your gold bond matures, you're gonna get 60,000, the real gold value on that time. So it's a very nice way. The second best nice way to invest in gold is buying gold ETF. Well, the ETFs is like exchange traded fund. Well, the next class of asset, which brings us to the sixth number of asset, which is cash. Well, it's pretty simple, it's pretty liquid, so you can use it anywhere, anytime that you need. So the upside is it gives you liquidity, it gives you immediate buying power. So if you want something, you can just go ahead and buy it. The downside is just because it's highly liquid, you tend to blow it. And another downside is most of the time we keep our cash idle. We keep it in the savings bank account, which generates very low return, which cannot beat the inflation. Guys, the better thing to do it, if you don't want to lock in your cash in a fix or in a stock or in a mutual fund, the best thing to do with your cash is putting your money in a liquid fund. Liquid fund is also kind of a mutual fund, but it doesn't have much of a risk. All right, there are a lot of safe liquid fund out there in the market. Do a little bit of research and put your money in your cash in this liquid fund, and this is gonna generate a little bit of higher return. The next class of asset that we're going to talk about today is business. Well, that's my personal favorite. If you look at it in today's day, most of the young entrepreneurs, they would like to invest their money in new businesses. Either it's Mark Zuckerberg from Facebook or Joe or Nathan from Airbnb. They all started very early, very young. But common people like us, we can, when we have a 9-to-5 job, well, if you are passionate about something, you can go ahead and try your luck out there. But the thumb rule is test the water before you jump. Test the water before you jump. I say it again. Well, the thing is, when you're starting a business, it starts small because you do not know if your business is gonna be very successful or is gonna be a disaster. If you see your business is doing well, if you see your customers are accepting your product, you can expand your business. If you see stability in your business, you can leave your 9-to-5 job and you can continue with your business. Business give you the opportunity to grow and have the life that you have imagined throughout your life. The the income is unlimited, and there the sky is the only limit. So if you are passionate about something and if you're determined, start your business. One interesting fact is, do you know the first year, it was I think 1896, the Coca-Cola company, they sold only 25 bottles of Coca-Cola in the first year. So look at Coca-Cola in today. There are more than 230 countries that Coca-Cola is present. So you might not get like instant success. It might come to you slowly, but if you are determined, it's definitely gonna come to you. Well, I would like to summarize the whole thing together. There's a famous investor named Mr. Warren Buffett. He famously said that do not put all your eggs in one basket. So if you want to be wealthy, if you want to be rich, and if you want to achieve financial freedom, remember to invest in all these asset class. All right, so you do not know which one is going to work, which one is not going to work. So if you invest in all different asset class, it balances out in a nice way. Do diversify your personal finance, and rest leave it on time. With time, you will achieve your financial freedom. So if you like the video, please click the like button, and if you're new here, please consider subscribing it. Thank you so very much.